Good morning, I'm Chris Swift. Welcome to Market Day Report. A little activity yesterday afternoon, a little green on the screen as you might call it, and anxious to see how we started last night. I know we were a little bit firmer as we're coming into the morning this morning, and we are still up a little bit, with the March corn up 1 1/4 now, 408 1/4, back above that $3 handle. May up 1 1/2 at 423 even, out to the December new crop, 458 1/2, up 1 1/2. And I think the soybeans have put on a little more premium last night, up 12 1/2 on the March at 1148 1/2. The May contract up 12 1/4 at 1157 1/2. The July up 12 1/2 at 1167 3/4. Let's take a look at November beans and see what Novi beans traded at. And they were a little bit firmer as well, with the November up 11 1/4 at 1141 even. We'll take a look at Chicago wheat. Chicago wheat was not going to be left behind and is trading plus again this morning, up 5 1/4 on the March at 582 1/2. The May up 3 3/4 at 578 1/2. New crop July at 581, up 4. Kansas City hard red winter wheat, a little bit firmer as well, up 3 on the March at 586 3/4. The May up 5 1/2 at 582 even. The July contract up 4 1/4 at 570 3/4. And we'll wrap it up with Minneapolis spring wheat, a little bit firmer, up 6 on the March at 654 1/4. May up 8 1/2 at 661 1/4. And July a devilish price at 666 3/4, up 9. So I'd like to invite my guest in, Darin Newsom. Darin is with Bar Chart. And Darin, I've seen all kinds of things happen from yesterday to today, a little bit of a reprieve. Did any of that spark any of your attention? Is it a selling opportunity? Is it the bottom? Tell us what you're thinking this morning.
I don't think it's the bottom yet, Chris. We need to get, one day does not a trend make. It's something that I always like to refer back to. But we did see some interesting things happening yesterday. And, if we go back and look at that March-May corn futures spread, we saw that March lost ground to May, and it did again overnight. What we've seen is that spread has gone out to about 70% calculated full commercial carry. That's not bullish. So we're continuing to see some of those cash bushels coming to town. It's putting a little bit of pressure on the March contract as we head towards delivery here later this week. Similarly, in the May-July soybean spread, we saw it move out to 34% calculated full commercial carry. Now, that's not bearish, but it finally crossed that bullish threshold. So, what we're seeing here is that there was some commercial pressure yesterday to offset the non-commercial short covering. That both positions in corn and soybeans have been record large futures positions of late. So, not a huge surprise that we're seeing some covering. We'll see how long it lasts. Again, I don't know that we could say that the bottom is in, particularly with the amount of cash bushels yet to come to town. But we'll see. We'll see how this thing plays out.
And what kind of rally would you be looking for? If things we got a short covering rally by the funds, you get a little different change in weather, what would you be some kind of expectation that you'd be looking for?
I think we can put the weather at least on the sidelines for right now. And when we get closer to planting season, then we'll see how that starts to affect the new crop market. But right now, it's hard to say, because, again, funds went to a net short of 266,000 contracts in corn. What we've seen in the wheat market, in Chicago wheat market, is over, the past couple of months, funds did something similar, and they covered 70% of that position. And March Chicago wheat has taken off and skewed spreads. So, there's a good deal of upside. I don't really want to put a limit on it, but we have to sit back and watch it and see if that's what's going to happen. But on the other hand, we do know there's a good deal of cash corn to come to town, maybe before planting season begins, particularly if there is a decent rally. So that could limit what we see. So it's going to be an interesting give and take. We're going to have to keep an eye on these markets, almost daily, if not weekly.
All right, and I want to go back to the bean meal market for just a second, because when you look at something to do, I believe that's a market with something to do with the back end of it, pretty much right around the same price. There's no carry, there's no inversion to it. It's very, very small. Is this an opportunity for maybe pork and poultry producers to be looking at, $130 lower now for bean meal?
It may not be a bad, if they don't have some coverage in place on the bean meal market, they might want to go ahead and do that. I'm not thinking, bean meal has made its big move. And now if we do see some increased availability of soybean supplies, that could put a lid on the potential soybean meal rally. But, it's not a bad place to get it in. It's not bullish. It's not bearish at this point. So if you're needing to get some coverage, certainly we could do that. We have seen exports slow down a bit, but, still we're running ahead of last year, one of the few markets we could say that in.
All right.